Hello everyone, welcome back to my channel. My name is Rizka Permata Putri with NPM 224111043 from Technocrat University Indonesian. In today's video, we will talk about a very important topic for both citizens and businesses in Indonesia, Indonesian tax law. This topic might sound serious and complicated, but don't worry, I'll break it down into simple points so that everyone can understand what Indonesian tax law is, why it's important, and how it works in practice. By the end of this video, you will have a clear picture of the legal foundation of our tax system and your rights and obligations as a taxpayer. 1. What is Indonesian tax law? Indonesian tax law refers to the set of rules and regulations that govern how taxes are collected, managed, and enforced in Indonesia. It tells us who needs to pay taxes, what kinds of taxes must be paid, how to calculate them, when and how to pay, and what happens if someone doesn't follow the rules. Just like traffic laws help keep the roads safe and organized, tax laws keep our public finance system fair and functional. 2. The legal basis of taxation in Indonesia. Every tax system must have a strong legal foundation. In Indonesia, the highest legal basis for taxation is the 1945 Constitution, especially Article 23A, which says, "Taxes and other compulsory contributions for the needs of the state shall be regulated by law." This means the government can only collect taxes if there is a law that clearly states it. No tax can be imposed without a legal regulation. Examples of tax laws in Indonesia. Some important laws include 1. Law on General Provisions and Tax Procedures, UUKUP. This is like the main book of taxation, covering registration, payment, reporting, and sanctions. 2. Income Tax Law, UUPPH, regulates tax on individual and corporate income. 3. Value Added Tax Law, UUPPN, regulates tax on goods and services. 4. Law on Local Taxes and Levies, covers taxes collected by provincial or regency governments. 3. Principles of Indonesian Tax Law. Indonesian tax law is built on several important principles. 1. Legality principle. Taxes can only be collected if there is a law that regulates it. 2. Equality principle. Every taxpayer with the same conditions should be treated equally. 3. Certainty principle. The amount, time, and method of payment must be clear. 4. Convenience principle. Taxes should be collected in a way that is easy for the taxpayer. 5. Economy principle. The cost of collecting taxes should not be higher than the revenue. 4. Taxpayer rights and obligations. In Indonesian tax law, you have both obligations and rights. Obligations. Register to get a taxpayer identification number, NPWP. Calculate, pay, and report taxes honestly. Keep financial records as required by law. Rights. Receive tax services and information. File objections or appeals if you disagree with a tax assessment. Get a refund if you overpay taxes. Example scenario. For instance, if you pay more VAT than you should because of a calculation error, you can request a refund through the Directorate General of Taxes. That's one of your legal rights. 5. Tax collection and enforcement. Tax collection in Indonesia is mostly self-assessment based. This means taxpayers calculate and report their own taxes. However, the Directorate General of Taxes has the authority to audit taxpayers, issue tax assessments if they find underpayment, impose administrative sanctions like fines and interest. In extreme cases, use law enforcement to collect unpaid taxes. 6. Penalties for noncompliance. To make sure the system works, Indonesian tax law also includes penalties for those who don't follow the rules. Administrative sanctions can include fines for late reporting, interest on late payments, additional penalties for incorrect reporting. Criminal sanctions apply for serious violations like tax evasion or falsifying documents. These can include large fines and imprisonment. 7. Recent developments in Indonesian tax law. In recent years, Indonesia has made several reforms to modernize its tax law. Examples include the introduction of electronic tax reporting, e-filing and e-BUPIT. Digital taxation rules for online services and e-commerce. New tax brackets for personal income tax. These changes aim to make the system more efficient, transparent, and fair. In conclusion, Indonesian tax law is the backbone of our taxation system. It ensures fairness, clarity, and accountability in how taxes are collected and used. As responsible citizens, we should not only comply with tax laws but also understand them. Because the more we know, the better we can protect our rights and fulfill our obligations. Remember, taxes are not just about money leaving our pockets, they are about building the nation we live in. That's all for today's discussion on Indonesian tax law. I hope this video helps you see taxation from a clearer perspective. Don't forget to like, share, and subscribe, and I'll see you in the next video.